Welcome to Illuminati Silver. We tell the truth about silver. Today is Saturday the 30th of October 2021, and we're publishing our gold and silver weekly update for the week ending the 29th of October. Gold fell $9 last week, falling from $1,793 to $1,784, having hit a high of $1,810 and a low of $1,772, a fall of 0.5%. In sterling terms, gold finished the week at £1,303. That is unchanged. And in euros, it closed at 1,542 euros. That's up 2 euros. Silver fell 44 cents, falling from $24.36 to $23.92, having hit a high of $24.64 and a low of $23.68. By the end of the week, it had fallen 1.8%. In sterling terms, silver closed at £17 and 48 pence. That's down 23 pence. And in euros, it closed at 20.69 euros. That's down 22 euros. The gold to silver ratio rose from 73.6 to 1 to 74.6 to 1. That sort of level average of around 75, with it going 2 or 3 points above or 2 or 3 points below, seems to be a comfortable space for gold and silver of late. Looking at equities now, the Dow Jones closed on Friday at 35,819. That's up 89 points on the day and up 142 points on the week. The S&P 500 closed at 4,605. That's up 9 points on the day and up 61 points on the week. And the Nasdaq Composite closed at 15,498, up 50 points on the day and up quite a sizable 408 points on the week. This week's rise has now ensured that all of the major US exchanges are now in positive territory for the month again and showing gains between 35 and 42% for the year. And this is despite so many people calling for the imminent collapse of the equity market. We admit it has been buoyed by loose monetary policy. We don't question that whatsoever, and will probably be further buoyed, that's B-U-O-Y-E-D, by Biden's infrastructure plan once it is passed. And then thereafter, we can't really see what's going to help it. But we'll wait and see. Looking at oils, obviously they're down slightly because the dollar index is up, and we have Brent crude at 83.60, that's down $1.93 on the week, and WTI crude at 82.62, that's down $1.14 on the week. The dollar index now stands at 94.12, and that's up 0.48 on the week. We said last week we expected to go up to 94, and it has done just that, albeit it took until Friday to do so. Now, we concluded last week's video with the following forecast, and then we're going to have a bit of a rant. This is what we forecasted. We therefore expect to see gold trading between 1750 and 1835, with 1720 and 1860 as outliers. We can see silver trading between $23 and $25, with $22.50 and $25.50 as outliers. While gold traded well within our predicted range and, in fact, held quite a tight margin of just $38 between its high of $18.10 and its low of $17.72. Whereas in recent times, standard variation has been around the $50 mark. Silver traded beautifully within our normal trading range, with a disparity of 96 cents between its high and its low, reverting back to its normal disparity in normal times of about $1 or slightly over or slightly under. Now, we had one troll on our channel stating, quote, "Your margins between high and low are so wide you cannot be wrong." Really? Our predicted gold range had a margin of $85, which is just over 4.6%. And our margin for our silver range is around 8% for a whole week. Whereas there is significant amount of data, plus the prospect of a significant FOMC announcement within days. And this Charlie, we'll call him Charlie because that's a derogatory term we use in the UK for idiots, makes such a comment, conveniently forgetting the fact that silver can move up or down more than 5% in a day. And we've seen gold make similar shifts too, not too often admittedly, but it has done. Now on the back of this comment, we looked at some of last week's video headlines, not going back a month or 2 months where people were telling us now gold is now definitely going to $2,000 and silver's definitely going to $30 within days. Just last week, some of the headlines. Gold is a buy now. Silver price is headed for a bull market. Silver prices will break records. Silver prices to hit all-time highs. Silver about to enter the commodity supercycle. Physical silver's going to skyrocket. Yes, they will if the dealers keep increasing the margins. The prices will skyrocket, not necessarily the demand. Now, not once did we see this Charlie comment critically on any of the super bullish forecasts these videos announced. And this was 3, 4, 5 days ago, and have all been proven wrong at least for a week. I could go back 2 weeks and find out equal number of videos who were wrong, and go back a month, go back 3 months, go back 6 months, go back 9 months. And silver has moved down after all of their rather bullish publications. Even channels whom we previously held in regard and acted in a more cautious manner earlier this year, they admitted they sold a lot of their silver because they could see prices falling. They're now coming up with stupid clickbait headlines like, "The price of silver doesn't matter." Really? Try saying that to the poor sods who bought it in 2011 at $50 an ounce and have been underwater for the past 10 years. Of course it matters. We're surrounded by pumping buffoons who are conning you because they either sell silver and gold or they want eyeballs on their YouTube channels. They're a disgrace. And those who repeat their nonsense are just stupid sheep. Yes, we are believers in silver long term, otherwise we'd not have even created this channel. But we have to put into perspective the fact that we've been 95% accurate in our predictions week on week, within the margins of no more than 8 to 10% generally, even though news and economic headlines would suggest such moves in a day, let alone in a week. With this in mind, each morning we also produce daily updates expressing the reasons for the various price movements and news which could affect prices that day and that week. So do tune into these. They are quite valuable if, of course, you're interested in this space. If you're not, then they're not valuable at all. And all week we've stated that the dollar value will rise above 94 very shortly and will strengthen even further. And this is exactly what has happened. Okay, rant over. This week's economic data was mixed. On the positive side, we had a strong consumer sentiment index and improving jobless claims reports, and core inflation announced as predicted at 0.2% for September. On the negative side, we have lower real consumer spending, negative advanced durable goods orders and trading goods, and negative personal income of -1% for September. Now, before we give our price forecasts, let's take a look at the economic data being published in the United States this week, which will be a crucial week. And we shall see why in a moment. On Monday, we have the market manufacturing PMI for October, the ISM manufacturing index, and construction spending for September. On Tuesday, we have a home ownership rate for quarter 3. Wednesday, ADP employment report, FOMC statement, and Jerome Powell's press conference. Then on Thursday, we have the weekly jobless claims, international trade deficit for September, productivity for quarter 3, and unit labour costs for quarter 3. Then on Friday, we have the non-farm payrolls report, the unemployment rate for October, and average hourly earnings for October. and also consumer credit for September. Now, the non-farm payrolls would have quite a significant impact, but as we're going to have the FOMC statement on Wednesday, whilst we believe the non-farm payrolls will have an impact, the statement is going to be far more dominant. So it's a most crucial week for economic data. And we will find out when the Fed proposes to introduce tapering of its $120 billion a month bond buying program and its view on interest rates for 2022. We also have key manufacturing, services and employment data all in 1 week. So we can expect to see some significant price movements. Yes, Charlie, we may widen our bands for this week because almost anything can happen. Now, before we look at our price prediction, we can see that technically gold is being squeezed by a number of trend lines and moving averages. We still have some support at 1750 and resistance at 1835. The technicals on their own suggest there could be a slight upward movement in gold, but we all know the announcements due to be made next week, depending on what they are, could have a differing effect. Most analysts seem to agree currently that the main outlier trading range for silver over time, not tomorrow or next week, but over time, lies between $22 and $28. We're a little more pessimistic and we believe it actually exists between $20 and $27. Time will show if we're right or not. But all analysts seem to agree, sensible analysts, not pumpers, but serious people who study these things, seem to agree that it will take some time for silver to break out of these ranges. So whether you're bearish slightly like us and have a $20 bottom, and bullish like the others and have a $28 top, very few see any breakouts beyond these figures. Short term, there is support for silver at the 50-day EMA of 23.65, with psychological support at 23.50. If this is breached, and a hawkish decision by the Fed on Wednesday could indeed cause such a breach, we could see silver fall towards 23. There is resistance at 23.90, with additional resistance at 24.30. And the psychological level of 24.50 above that, and recent highs of 24.80 above that again. So the technicals are really suggesting potentially 23 to 24.80. We think they could be broken on either side. So, where do we see gold and silver prices moving next week? We're all in the hands of the FOMC and Fed on Wednesday. We're expecting to see some movement before then and then, of course, immediately after. Language on Wednesday will be important, and the Fed will be careful not to upset the equity markets too much either. We believe the tapering will come into effect almost immediately, and certainly by December at the latest. And in view of what happened at the ECB, the European Central Bank, last Thursday, we see the dollar strengthening further, which is not good for gold and silver. Now, if we're wrong and the Fed bottles it and appears incredibly dovish, we don't think they will, but Powell hasn't rung us to tell us either way, then we can see an immediate rise of at least 5% in gold and silver prices, if the Fed is very dovish. So, Charlie, we are extending our range for this week, because almost anything can happen, though we are more inclined towards bearishness for precious metals than bullishness at this stage. We therefore expect to see gold trading between $1,725 and $1,845, with $1,700 to $1,860 as outliers. We can see silver trading between $22.50 and $25.50, with $22 to $26 as outliers. What do you think? Do share your thoughts. It'll be interesting to see how it pans out. We've placed links to a number of videos we think are quite important in the description box below. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. We wish you all, and Charlie included, a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.